So Puregold Price Club is a young company. We were only organized in 1998, putting up one store in Mandaluyong City. You will see on this slide the history and development of the company as a modern grocery retailer. As I've said, we put up one store in 1998 and grew the number of stores basically on a very low-key basis, and started only moving and ramping up our store expansion in the last 3 years prior to our IPO in 2011. When we did our IPO roadshow in 2011, we committed that from our store count of 62, we will be closing 2011 with 100 stores. And we delivered the 100 stores in 2011. In 2012, coupled with 2 acquisitions, we ended our store count at 156, having acquired SNR with 6 stores, the Membership Shopping Club, and Parco with 19 stores in Metro Manila, Rizal, and Cavite. For this year, 2013, we initially guided that we are putting up 25 new stores, but after the end of the first half of 2013, we upgraded that guidance to 35 new stores for 2013. So where are we now after the first half of 2013? As of June 30, 2013, we have already opened 21 of the 35 new stores that we have committed, 21 new Puregold stores and SNR. We acquired Company E, this is the Unilane brand, and this brought 15 stores into our store portfolio. As of the end of the first half of 2013, we are operating a total of 192 stores with a total net selling area of over 330,000, growing the net selling area by about 8% from organic expansion and about 10% including acquisition. In terms of financial highlights, we ended the first half of 2013 growing our consolidated net sales by about 42%, with Puregold stores increasing its sales by about 24% and accounting for 84% of the consolidated net sales. In terms of gross profit, our gross profit grew by about 57%, with gross profit margin improving to 17.5% from 15.8% in the first half of 2012. Our operating income increased by 65%, with operating margin rising from 7.1% from 6.1% in the first half of 2012. Our consolidated net income after tax expanded by 72%. Puregold stores net income after tax swelling by about 21.2% and accounting for about 65% of the consolidated net income after tax. Puregold net profit margin as of the end of the first half of 2013 is now posted at about 5.4%, growing from 4.4% in the first half of 2012. So how did we achieve this financial performance? Let us now look into our operating performance as of the end of the first half of 2013. Puregold as a brand is operating 185 in 3 business formats. The hypermarket with an average net selling area of about 3,000 square meters, the supermarket or what you will see as the Puregold Junior with an average net selling area of about 1,000, and the smallest format, the Puregold Extra, the very well landmark at the corner of San Andres and Osmeña Highway, that's the Puregold Extra, with an average net selling area of 400 square meters. The differentiation among these 3 business formats is, other than the net selling area, would be on the product offering and likewise on the target market. Both the hypermarket and the extra are targeting our end consumers and the reseller program. As you are aware, Puregold has a dedicated and well-focused reseller program wherein we are acting as if we are the wholesalers to the sari-sari stores. This is actually a loyalty program with a membership base of about 250,000, and this loyalty program is effectively generating about 35% of the total top line of the company on a company-wide basis. But on a location-specific basis, the our Valenzuela store in Bulacan is actually accounting for about 50% of its sales from the sari-sari stores.